Zcash just hit $800 and broke a record that has been sitting since January 2018. If you thought the altcoin season was still months away, today's episode is going to make you rethink that real fast. What is up, everybody? Welcome back to Vishmaster Crypto Daily. I am your host. It is August 22nd, 2026, and we have got a packed show today. We are talking about the Zcash explosion and the grayscale ETF play behind it, Bitcoin surging 25% to nearly $80,000, and why a Treasury Department accounting tweak had everything to do with it, Ray Dalio telling the world to buy Bitcoin right now, a new lawsuit against Illinois over their crypto tax, and a critical security update every hardware wallet user needs to hear about. Let us get into it. Alright, Zcash. ZC up 48% in a single move, trading above $800, which is meaningful because that blew past its January 2018 all-time high. Let that sink in. We're talking about a coin that has been grinding sideways and getting ignored for years, and it just broke a multi-year record. So what happened? Two things hit at the same time. First, Grayscale filed fresh paperwork showing real progress toward converting their Zcash trust into a spot ETF. We have seen this movie with Bitcoin and Ethereum already, and the market knows exactly what that filing pattern means. Second, futures volume on ZEC hit billions of dollars almost overnight, which tells you this was not retail Twitter hype. This was coordinated positioning. Now here's my take. The narrative forming around Zcash right now is the privacy coin angle meets the ETF approval cycle, and people are calling it the next Bitcoin in terms of institutional adoption sequencing. I am not saying it is the next Bitcoin, but I am saying when Grayscale files, you pay attention. What to watch? The SEC response timeline on that conversion filing, and whether ZEC holds above that 2018 peak or gets rejected right at resistance. If it holds, you could see a second leg. If it fades back below 700, a lot of leveraged longs are going to get crushed. Now, let's talk about why Bitcoin ripped 25% to nearly $80,000 in just a few days, because the explanation here is more interesting than most people realize. The headline is that the Treasury Department adjusted how it handles debt buybacks, and while analysts were very careful to say this is not quantitative easing, the effect on the bond market looked suspiciously similar. Long-term yields, which had been sitting at 19-year highs, started coming off. And when long-term yields fall, risk assets breathe. But here is the accelerant that turned a decent Bitcoin rally into an absolute rocket ship. The market had been leaning massively bearish. We are talking record short positioning. So when price started moving up, those shorts did not just lose money, they got liquidated, which forced buy orders, which pushed price higher, which triggered more liquidations. That feedback loop is what turned a macro tailwind into a 25% move in days. And it was not just the short squeeze. Cointelegraph this morning pointed out that institutional buying has been quietly building, the regulatory environment in Washington has gotten noticeably friendlier, and macro conditions are genuinely improving. This is a confluence move, not a one-trick pop. Meanwhile, while everyone was watching Bitcoin explode through 75,000, our Vishmaster fleet was running delta-neutral strategies across perpetual futures and sitting on a 12% return for the week with essentially zero directional exposure. The bots do not care which way it goes, they just need volatility, and this week they got plenty of it. What to watch on Bitcoin? 80,000 is the level everyone has circled. If we close a weekly candle above it convincingly, the next conversation is about whether the previous all-time high becomes the next floor. Speaking of Bitcoin, Ray Dalio, hedge fund legend, estimated net worth $15 billion, came out and told investors to buy, quote, a bit of Bitcoin right now. He specifically recommended overweighting Bitcoin and gold versus bonds amid what he sees as a potential debt crisis brewing. This is not a guy who has always been a Bitcoin bull. He came around slowly and publicly, and every time he reiterates the thesis, it carries weight with the traditional finance crowd that is still on the fence. His logic is straightforward. If you are worried about currency debasement and sovereign debt spiraling, you want hard assets. Gold has always been his go-to, and now Bitcoin is sitting right next to it in his recommendation. What to watch? When figures like Dalio speak, it tends to pull in a new wave of institutional allocators who needed permission from someone they already trusted. That money moves slowly, but it moves in size. Let us hit Illinois real quick, because this one matters for the broader regulatory picture. The Crypto Council for Innovation and the Blockchain Association have now joined an existing lawsuit against the state of Illinois over its newly approved 0.2% crypto tax. The argument from the crypto side is essentially that this tax is unconstitutional and creates a hostile operating environment that will push businesses and users out of the state. Illinois is not the only state watching this. Several other state legislatures have been floating similar proposals. If the lawsuit succeeds, it sets a precedent that other states will have to respect. If it fails, you are going to see copycat taxes pop up across the country. This is a slow-moving story, but it is one of those foundational regulatory battles that shapes where the industry operates 5 years from now. Keep an eye on it. Last story, and this one is for every single person who holds Bitcoin in cold storage. CoinKite, the company behind the Cold Card hardware wallet, just pushed a major firmware update after an internal security review that ran for 3 weeks. What they found was serious enough that the new firmware now requires users to add their own entropy, basically their own source of randomness, when generating wallet seeds. This is a big deal because random number generation is one of the most common attack vectors for hardware wallets. If the device's randomness is predictable or compromised, an attacker can potentially reconstruct your private keys. On top of that, they patched several additional vulnerabilities uncovered during the review. Now, we do not know exactly what the exploit was that triggered this review, but the reference to a $130 million Bitcoin exploit in the reporting context suggests the stakes here were not theoretical. If you have a cold card, update your firmware today. If you hold any meaningful amount of Bitcoin in cold storage on any hardware wallet, this is a reminder to verify your device manufacturer is actively auditing and patching. Security is not a one-time setup. It is an ongoing discipline. Quick word on the BitGet CEO outlook before we wrap. Gracie Chen said she expects Bitcoin to end the year within $10,000 to $20,000 of current levels, and she is skeptical the U.S. government will actually buy Bitcoin within the next 2 years despite all the political noise around a strategic reserve. Her take is that macroeconomic uncertainty keeps a ceiling on the upside, but also provides a floor. Honestly, that is a sober read, and probably the right framing for anyone trying to plan a position into year-end rather than just chase the current move. Alright, that is your August 22nd Crypto Daily. Zcash is on fire and the ETF clock is ticking. Bitcoin broke 80,000 on a short squeeze that had macro fuel behind it. Ray Dalio is telling his people to hold hard assets. Illinois is getting sued, and please update your cold card firmware. If you are not subscribed yet, hit that button right now because this is a market that moves fast and you do not want to be catching up. Find us and the full Vishmaster fleet data at Vishmaster Live. I will see you tomorrow.